Okay, so the first part is about the token, tokenization, and the token economy. So again, I would like just to spend some time on the concept of token. So this is not a new name nor a new concept. If we go back to the dictionary, a token is defined as a thing serving as a visible or tangible representation. So it is always here to represent something, either a fact, a quality, or a feeling. Actually, we even use it as a sort of appreciation to say, I wanted to offer you a small token of my appreciation. It could be also used as a voucher that can be exchanged for goods, services, and or for a given gifts or whatever. So it starts to be a recorded token. And as you can see, I have shown some kind of representation with it as a plastic token within a casino, as a reward, which is showing, again, something for a global, for loyalty, as a token, as a key or dongle, but also token as a concept or as a sort of digital token for the network. We used to talk, for those who have been in IT, token ring, which was definitely a mechanism for or protocol for network. So it is very, how to say, there's a variety of definition and things, but they are all related to some kind of representation, whether for something that is tangible or intangible. Now, let's go a little bit deeper into what's currently when we talk about token, and especially with the appearance of Bitcoin and blockchain. And what I'm saying here is that there are a lot of metaphor and neologism. And this metaphor or neologism, sometimes they have some limits. So with the appearance of Bitcoin and blockchain, new concepts have been created. And these concepts are often based on analogies or a new word that we have introduced. Some of them are actually inspired from pre-existing concepts. And that exists already, as we have seen in the past. And therefore, even the concept actually of token is inspired from monetary, from the coin. And we do not always use the word token for referring to a coin or to currency. There isn't always something. And this is the biggest problem, is that these concepts are not always the most suitable for either operating or representing or illustrating the operation or what is specific to this new technology that we are referring to. So as a conclusion, we can say that actually metaphors are effective mental models, but they have a lot of limitation. And if you take, for example, the word Bitcoin, this is definitely a neologism. So it is from the word bit, which is the binary digits, and coin, which is a coin of money. Money as an instrument must satisfy three fundamental functions. First, it has an account unit. There was a payment method and the value reserve. And if we look actually to what is happening, especially what's happening currently with the Bitcoin, is actually incapable of satisfying in the first two functions. So it's not anymore, it's too expensive to be used as an account unit or as a payment method. So at best, it will be used as a sort of reserve. And more we are talking about as a reserve replacing the gold, a sort of digital El Dorado that one day can may become as a substitute. And definitely now when you have the Bitcoin, you would like to hold in to it because you always expecting that it's gonna increase. So this is one thing. The second or the last thing on this point is that not all tokens are Bitcoins or cryptocurrency. And we're gonna go later on and to talk about different type of tokens that are more of interest to us. So the thing that we're gonna be drilling down is asset tokenization and how tokens are used for digitizing assets. So asset tokenization is this process of converting the rights to assets with economic value into digital token. So what does it mean? I have a set of assets or I have a given asset. And what I do is I define a sort of representation. And this representation, it's a digital representation that's gonna give me a right. And we're gonna go later on to define what type of right that this token can give us. And these rights also have an economic value. So digital token can represent an object, and this object could be either physical or material, or even virtual or immaterial, or not. Sometimes there was actually no attached physical, material, or virtual. That's typically the case for many cryptocurrencies. Tokenization does not stop from the object to be being replicated. However, only the entity in possession of the token can prove its authenticity and originality. And this is very important. So actually it has this concept of authenticity and originality that is attached to it, or at least this is a service that it offers. And therefore it acts as a sort of license or a certificate or right of ownership. And another aspect of the token is that sometimes the token becomes itself as an asset, having its own value and exchangeable. So though it can represent an asset, but it's also when it becomes tokenized, it becomes another asset that becomes by itself having its own value that is different or just a function of the asset that it is supposed to represent, and by itself it becomes exchangeable. It enables the identification, as we said, of assets in a unique way, and therefore it facilitates traceability throughout the entire supply chain that we are defining. It enables transfer of assets in digital format throughout the world, which make it investment a sort of democratized, and in real world assets far more convenient and efficient. And another aspect is this aspect that it can be divided into small units. And because it can be divided in small units, it's going to enable more market participation, more liquidity, and therefore more participants to join the market. So these are some of the advantages of asset tokenization. But as we mentioned, and I'm trying to see, is you have an asset, you're going to have a process to digitize this asset and to create a token, and this token will start to have its own life and gives you right to the asset, and it becomes sometimes by itself another asset. Now, another aspect is that blockchain, or more generally distributed ledger, has some attribute that could be very appealing to the investor and to the tokenization process. Why? Because, and I'm not going to go here into the technology at all, I'm more talking about the characteristic and why blockchain could be interesting for tokenization. And that doesn't mean that actually all tokenization also have to be on a blockchain, but blockchain is an interesting technology that's helped into the tokenization. Why is it interesting? Because it's enabled for immutability. What does it mean? It means that once a holder acquires a token by means of funding, investment, or other type of a provision, nobody can erase the ownership. And actually, it cannot erase any other events. All the events are kept. You have a history of this event. It is accessible, so token can be accessed from any place in the world using a computational device. It is fractionable, and this is when we talk about this aspect of dividing the token into a smaller unit, which again has the liquidity, increase the expected value, and also it eliminate the need for you can do actually small investment or small trade. It is cost effective because it eliminates the middleman, or at least this is what it's supposed to do. And last but not least, it is transparent as it eliminates asymmetry of information. It's present during the transfer of ownership because now it makes it transparent and people can look to what is happening and trace back what happened. And as I said, we do not need to have a blockchain to have tokenization. Tokenization just is an aspect that adds up into this process of making it more effective. And these are some of the quality characteristics that I mentioned. Now, here are some token functions. And tokenization and tokens enable, as we say, the user to have rights and privileges that are either economic or reputational. And therefore, we can classify the token into 4 classes. One is application-based or applicative tokens, as we call them. So generally, they are here to fulfill or they enable a certain number of services or function, like Filecoin. I can use it to transfer files, or I can use it to do some action. And these actions, as we mentioned, they're going to have some, they are secure, trustworthy, transparent, etc. It could be also participation token, enables user to vote or participate in governance. And typically, this is the example of the DAO member, where we can have a voting mechanism on investment projects. Reputation token, and these are probably the most known even before the blockchain and beyond. I showed the plastic, I showed the card for loyalty and reliability, but now more and more we see also digitized and digital tokens that would like to replicate this kind of reputation. And the last group is investment tokens, where actually you have a share in an initiative, a project, or a venture, and potentially leading to dividend and or voting rights. So it could be also a combination, not only of having dividend, but also it gives you other rights, including governance, etc. So these are the 4 main functions that a token can serve, especially when you are using it for digitizing or for tokenizing an asset. Now, token value and token economics. So here I'm defining some concepts so we can later on drill down when we talk about the Consilience venture model. So the value of the token is directly linked to the associated object and or supported service. So definitely it is a function of that. And what is the token economics? So token economics is the study and more precisely the modeling of how token work within the broader ecosystem. So because you're gonna, when you have tokens, definitely you can have some members or it's gonna be public. And this is what we call this ecosystem, this supply chain. And what we are looking for is what is the value, what is the perceived value? And when this token is used, how does it impact the broader economy and ecosystem? And what we are looking for is to build some kind of models to have some estimation, to have some prediction. Well, first of all, there are many aspects, and these include aspects like token valuation. What is the price or the value of the token? How the token are distributed among the members? Are there different type of members or transactions or actions? The token holder behavior, how do they behave? And last but not least is the incentivization. How do we incentivize the ecosystem as a whole and the member for driving a positive behavior in the network? And that could be even stopping them from gaming the system, from cheating, and also for creating value to the entire system and ecosystem as a whole. These could be some of the goals, or removing speculation or others. Now, as a synopsis and to summarize this first part, this is, we have a token, as we said. A token represents, not always, as we said, an asset that could be physical or virtual, but also generally it offers service. If you have an asset, it's definitely going to be linked to a set of services. And more importantly, it gives the owner and the holder rights and the privileges. And this is, and then it becomes sometimes by itself an asset having its own value. Now, these rights and privileges are based on the functions that are fulfilled by the token. And as we mentioned, it could be applicative, it could be participative, and then it could be related to governance and or vote. It could be reputation in terms of reliability and loyalty, or it could be investment, which give you share. And of course, as investments sometimes also give you the rights in terms of governance and vote. And that gives you actually a sort of summary of what is asset tokenization and what entails. In addition, we have the concept of now ecosystem. And when we're going to add the ecosystem, then we are interested into the network effect and the dynamics. And therefore, this is where the token economics come into play. And how are we going to model this whole concept of interaction, the members, the distribution, and the value of the token include is good. So that's in a nutshell what is the first part.